What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is April 10th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I not only want to take some time to take a look at the short-term window as we approach the halving event from a month from today, but along with that as well, to take a look at the broader picture as well over the longer term and really talk about the trillions of dollars that are going to flow into markets and out of pre-existing markets, as well as the new trillions of dollars that the Federal Reserve is creating. So we've got lots to discuss, but I also want to mention that we've got a sponsored review for Hacking towards the end of the video with a new cybersecurity app that I really recommend you guys check out. So stay tuned for that. You won't want to miss it. All right. So let's go ahead and just take a look across the board in crypto markets here. As you can see, the vast majority of cryptocurrencies are in the red here. A general pullback here over the last 24 hours, cutting back about 3 to 4 days worth of gains here for crypto markets. But taking a look at the monthly window, right, this isn't too severe, just knocking us down a little bit below the $200 billion mark. We peaked out at a relative high around $208 billion. And this is, again, back to valuations we saw right before we had the dramatic 24 to 48 hour sell side pressure in cryptocurrency markets back here in the early part of March. So again, we've recovered on a lot of this. We're back to square one basically, and it's a matter of whether or not we see follow through going into the halving event. Now, I want to go ahead here and just jump right here to Bitcoin, take a look at the short-term window, and then we'll get into this discussion of the longer-term view. Do I think we're going to continue through on this? Yeah, so far we've been setting higher lows, higher highs. This to me is fine. I would like to see this continue pace here in the next 3 to 4 days. If we start to roll over and start setting lower lows, that's going to change my opinion. But at the same time, right now, right, this is not an area that I would get very fearful. Right, we had a nice pullback here, about $500 to $600 for Bitcoin. I would say, excuse me, probably exactly in this case, more around 500. So in this case, we'd probably start setting higher lows here and continue through. At least that's what I want to see. For me, in a trader's perspective on whether or not I'm going to stick with my prediction here, again, I would start to see lower lows and lower highs in this case. That was what would generally kind of change my opinion. But so far, the resilient strength we've seen so far here on the chart has got me really optimistic. And I think that with most halving events, we tend to see a pre-rally into the halving event, and then we see a sell-off afterwards as prices pull back. And again, as we start to see possibly a decline in hash rate in the short term. But nonetheless here, right, we're still on pace here for what we're thinking about. And not to mention, a lot of our altcoins have been doing really well. I almost forgot to bring up my crypto list here. We can see over the last 24 hours, most things have pulled back, but Chainlink has been killing it here on the daily here. We can see here that we're still holding relatively close to the highs up here after a 4-day rally out of the logarithmic ascending triangle. Now back up to a range that we're familiar with that we saw back in February and March. So again, a lot of cryptocurrencies doing this. A lot of cryptocurrencies providing good returns here. Another one is Kyber Network as well. Kyber Network rebounding a little bit, getting back to this previous support range here. We'll want to see this continue to follow through. Whether Bitcoin is pulling back or going upwards, doesn't matter. We want to see altcoins starting to gain dominance. We can see the overall market has recovered a lot of losses here. Altcoins gaining a lot of strength back, adding back 2.5 points here. And that's just where we're at right now and stuff that's not considering the highs where we went to 35.5. So again, good to see altcoins showing some resilience. And as I stressed before, guys, in the sense of the longer term pattern, the major thing we want to see here, we turn on logarithmic or not, it doesn't really matter here. The major thing we want to see here is we start to set lows away from the support line. So this is inverse Bitcoin dominance, meaning that altcoins are starting to set higher lows in general and looking like they're wanting to set side pressure to break past this resistance and go higher in this case. Sorry, I don't know why that was a tongue twister for me, but you can generally see here, before the last breakout, we had these kind of higher lows, and the momentum of these lows start to build up higher until we almost built an ascending triangle where we had consistent resistance, and along with that, higher lows, and that's what really kicked off the next cycle. Now, do you think it's going to move this fast? No, because the cycles are getting much longer, and that goes for altcoin cycles as well. And we're not going to have as much of the crazy returns as we had before, but there's definitely going to be some good opportunities in this case. And there's a lot of fundamentals back that up. There's a lot of exciting projects, right? We've talked about Chainlink. We've talked about Kyber Network. We've talked about Ren. We've talked about Basic Attention Token. A lot of these that are actually building real utility or fixing a lot of interesting problems within the cryptocurrency space that makes cryptocurrencies as a whole much more viable for financial technologies, etc. Right? Now, I want to go ahead and let's get to this major topic point here. So Yet again, guys, the Fed is feeling like they haven't injected enough stimulus. The $4 trillion that they injected, as well as the fiscal policy that the federal government injected of $2.3 trillion, was not enough. So the Fed is now stepping in as of yesterday and has announced that they're going to inject another $2.3 trillion in stimulatory activity towards lending operations, buying up, you guessed it, not only treasuries, but also more toxic assets like junk bonds. So I want to go ahead and just kind of do a bit of a rant here. It's not going to take me long. There's a really big problem with this, the Fed taking these stances of taking on not only, though it's good they're doing small business loans. I actually like to see this. But outside of that, the repurchasing of short-term treasury notes. But along with that, what they talked about was buying junk bonds. And basically what this president is setting, just like it did, just like the Fed did back in 2008 when it bought the, basically the mortgage-backed securities, what it's showcasing is, hey, financial sector, it's okay if you make mistakes. We'll just buy your bad debts. Go have at it again. Here's some new cash. Go repeat the exact same mistakes you made in the past. The logic and game theory there, if you're really talking about building a healthier financial system, is really backwards. And we can see that since 2008, we haven't learned that much. At least when we make mistakes, they're possibly in new formats. They're under new types of debts. In this case, now it's corporate debt. It's the greed of corporations that went on acquisition sprees, stock buyback sprees. And we're going to talk about that a little bit as we go through the video. But I want to go ahead and get to the core point here, right? When the Fed announces these packages, when they're taking on debts, they're injecting cash into the system. It is a stimulatory activity. Now, I want to go ahead and this is, of course, direct response into COVID-19. Good news here is that COVID is actually stagnating in most countries. The U.S. looks like we're finally flattening the curve to some degree. Italy, same exact thing. It actually started back a couple of weeks ago. Same here with Spain. France is the outlier here. I meant to click on Germany. If you believe the China data, I don't really believe it. Iran, in this case as well. A lot of the countries that were the severe cases of COVID are now starting to decline here, which is a really good sign in the long term. But again, we're going to have a multitude of these cycles, sadly, at the end of the day, right? But going to the point here, right? When we're talking about where this money is going to go, right? $2.3 trillion, and not to mention money pre-existing in the system that can move around. It can be an inflow into a new market and an outflow of a previous market, right? Where are we expecting this to go? Well, you all have heard me talk a lot about Bitcoin. You've heard me talk a lot about gold. And the interesting thing here is that really ever since the Fed has started to announce QE, right? Ever since they've started taking action on monetary policy, Bitcoin has consistently rallied week over week. And along with that, gold has rallied week over week as well, right? We escaped out of this crazy period of time where we had, this is a monthly chart, by the way. I'll take it to the weekly here just for the consistency's sake. Same exact thing as Bitcoin, rallying towards near all-time highs here, at least relative highs, my apologies, that we haven't seen since back here in December of 2012. But I don't want to talk about really the reaction, even the short term after monetary policy. I've been a critic in the past of saying that you can't look at a couple days or a couple weeks worth of price action to see whether or not these are going to be better performing assets during this time. And the thing I look for at the end of the day is consistent higher lows and generally higher highs in this case. Gold, at least in the short term, is delivering that in the sense of its consecutive support level here that it held back here in 2006 and 2008. And along with that, we are starting to set higher highs here in the short term and possibly test towards the longer term thesis, which is that gold is going to start setting higher highs here. It's acting exactly how it should during this time period. It recovered the losses from the cash grab that a lot of people had when people were looking to cover their positions during the time of fear. And along with that, has come back up. Buyers have come in response to monetary policy and pushed gold's price higher. And that's mentioned as well. Bitcoin has done the exact same thing, whether it be in the short term or in the long term. Bitcoin has been setting higher lows and higher highs. So long as it keeps up with this is good to see. Now, we talk about this, right? You know, we can talk about, you know, the shorter term things here, guys. How, for example, the fear and greed index for Bitcoin is looking good. But again, I want to stick to this bigger topic of inflows and outflows, right? The short term, yeah, Bitcoin looks good, but you know, let's really just talk about the end of the day. What drives markets? It's inflows and outflows. If a market is seeing a lot of outflows, prices are going to go down, right? As we saw with equities over the last couple of weeks, and as we saw for Bitcoin here, as there was the Plus token Ponzi scheme that had a ton of crypto that was looking to sell, was clearing through the order book. Its outflows out of the market. They were looking to cash out. So This concept of inflows and outflows is very simple. It's a question of what market is going to receive the inflows and which one is going to see the outflows as we're seeing the current macro environment change. Well, we have to understand the macro environment first. First off, the Fed is cutting interest rates. This means that in this case, there's going to be more easy credit created in this case. And then along with that as well, that is going to, as we've cut down interest rates, it's going to lead to treasury yields dropping. Okay, so we can expect very much that treasury markets are going to see an outflow because the yields in this case, as we saw here, and of course the treasury doesn't have the guts to actually post the real statistics, a lot of these actually went negative. A lot of these ones that are registering at zero, you can see back here in late March, a lot of these shorter term treasuries, and this is probably a direct response as to why the Fed is buying some of them, we started going into negative territory. All right, and again, you can see here that as the Fed buys these treasuries, right, and the more that these yields on the Fed funds rate, the interest rate on the Fed funds rate goes down near zero or below, treasury yields are going to go lower because you're setting a forced buy side demand for treasuries, and you're also lowering the base Fed funds rate. So basically, at the end of the day, here it's important to understand that bond yields go down when bond prices go up. If there's a guaranteed buyer of the bonds, the price is going up, meaning the yield is dropping lower, right? So in the end here, a lot of bond holders right now, I'm not talking about the Fed's going to keep buying them like crazy. As the yield starts to drop, it's going to start penalizing its holders. And this is going to cause a general outflow from other investors. Again, when that, tipping point happens, who knows? But we're talking about a multitude of trillions of dollars of wealth locked up in these treasuries that will circulate elsewhere. So in my opinion, it's going to knock down treasury markets. And as the Fed keeps printing and it starts to have negative interest rates that start penalizing you for holding it, this means savings, general dollars in this case that are sitting in a savings account and doing nothing, are going to look to fly to somewhere else where they're not being penalized for just simply sitting their wealth there, parking their wealth there. But along with that, they're also not going to get diluted by the rat race that central banks are having right now to print money out of thin air, right? Again, we talked about this literally just like a week ago, guys, how the Fed, if the Fed can print $4 trillion like that, the biggest expansion it's ever had in history, don't doubt that this is just the beginning. I mean, there was multiple cycles of QE last time around in the last recession. This is a very immediate shock to the system, and the Fed is going to keep printing money as much as it wants, right? And quite frankly, it's not giving much of it to the American people. Just finally, we're starting to hear some talks of small business loans, right? But this is not just the Fed. This is the Bank of Japan, the People's Bank of China, the ECB. You can already see it if you zoom into the chart here. All of them have leapt up outside of the People's Bank of China, right? And I have no doubt China will jump in and have fun, have at it, right? They're going to jump in, fill in the punch bowl, keep the party going. But all in all here, right, a lot of people would just say, well, okay, so we're making money extremely cheap. We're lowering interest rates in this case. We're printing a ton of money. Wouldn't this just go to equities, right? Well, that's a very fair point. In fact, that's really what happened over the last decade, right? We could see here that non-financial corporations were the biggest net buyer here of stocks. Okay, so we need to understand the element that has been pushing stocks higher here over the last 10 years. And that's really been corporate buybacks that have come in at record levels. And also dividend reinvestment programs. Excessive amount of dividends paid out to investors, therefore being reinvested into the stock, continuing to increase their stock position, but in continuing also to increase demand for the underlying stock and the price, right? So what are the trends looking like for stock buybacks and dividends? Well, let's first take a look here at stock buybacks. Stock buybacks ever since Q2 have had an actual 4-quarter sum here, or excuse me, the actual taking basically the quarter in that case and multiplying it by 4 has seen an increase here over the last 3 quarters. But the general 4-quarter sum, much like back here in 2007 and 2008, has started to decline. And the one thing that's important to take note of is that a lot of the major financial corporations, this is Q4 data, this is not taking into this existing quarter here. When Q1 data comes in, I will bet good money that this is going to be a decline beyond the last 3, and we're going to set a low somewhere between 450 to 550 billion, because financial corporations committed to not doing any stock buybacks for quarter 1 and most likely quarter 2. And a lot of companies simply aren't just going to be doing that because they're having to cover short-term losses in income, an outlay of expenditures, and they don't have the kind of frivolous ability to do what they did over the last few decades with easy money in this case, to go back and buy up their stock, right? This is not a good time to be talking about stock buybacks. And many of the stimulus packages set in a quotation that said, hey, you can't commit to stock buybacks right now. You can't do that. You can't use this cash for that. So in this case, a lot of companies are going to not be doing stock buybacks. The trend is already clear, guys. And again, whether or not you agree with this as being a depression or a recession, at least in the short term, stock buybacks are not coming back for a little while. At least they're going to be declining here like they did. Maybe not to the severity we saw back in 2008, but at least down into this range where it's going to take out a lot of that buy-side pressure from corporations that propped up stocks. So this is a major inflow that's normally coming in to prop up equities that's not going to be there. The second thing as well is dividends. Now, we don't have much data on dividends right now, at least in the sense of quarter 1 data, but we do have some projections here. This is one from FactSet and Refinitiv that showcases they believe a massive decline in dividends, almost nearly over the next 2 years, a cut in dividends by almost half or a little over a third here. From the peak of the coronavirus, similar back here to the peak of the financial crisis, it's going to take a multitude of years to get back up to the same kind of dividend buy-side support that we were getting from the current dividend programs and the probably DRIP programs that a lot of people are running, the dividend reinvestment programs. So you have two of the major inflows here that are going to get drained, that are going to be pulling back on the buy-side pressure for equities. And what you're going to have to get here in order for equities to go up is the Fed printing money and being a direct buyer, a net buyer of equities if they want to supplement the market. Now, guys, at the end of the day, I have no doubt in my mind that equities will probably go charging forward sometime in the near future. Right? They've already been doing pretty well here in the short term, to be fair. I have no doubt, though, that sometime, whether it's a couple of months, a year from now, who knows, that equities might have a chance to research higher. But the thing that people are not going to see, as they have tended to not see over the last few decades, is the inflation-adjusted chart. Okay? Now, I'm actually going to go ahead here, as I want to pull this up. I'm going to go ahead and pull up the chart here for the inflation-adjusted S&P 500. I haven't searched it up yet, but I want to pull it up here just to showcase it to you guys. And this will really drill in my point. All right, so we've got the inflation-adjusted chart here. I want to go ahead and take a look over the last 30 years. And we talked about this in a previous video, but I thought I'd visually showcase it with you guys, how the S&P 500, ever since the dot-com bubble through all the way over here towards 2014, had actually set lower highs and lower lows. Now, you would think if you looked at the normal chart, if you weren't inflation adjusted, that the S&P 500 topped out at generally the same range here, and the bottom was relatively at the same range here as well. But inflation adjusted, the extremes are much larger here, right? They start to define themselves much more on the chart. And you can also see the return over here is not as grand as it probably looks on the non-inflation adjusted chart. You can see here on 1400 all the way up here, practically doubling it here in this case towards about 3000, more than doubling it, right? Inflation adjusted, really not that much of a great return here, more around a 50% return. So what I want to stress to people is the Fed is talking about massive quantitative easing programs, is that the returns on the chart might look good, but if you look at them inflation adjusted, I don't think they're going to grow that much. What I do think is going to grow and actually provide a flight of growth for capital is a market that, again, is a hedge for treasuries, is a hedge for the risk that you take on in equity markets, and is a hedge for those who have $9.2 trillion in savings, right? The total amount in U.S. savings accounts, not to mention the other deposit accounts across the globe that probably double that number, if not, triple it, right? We're talking about tens of trillions of dollars at that point. That are going to look for some kind of market that doesn't penalize them for negative interest rates and also doesn't penalize them in the case of excessive printing. There are really three markets that do this. There are gold, silver, and Bitcoin. And I quite frankly, again, taking into account the inflows and outflows equation and taking into account the topic of what markets really have room to grow at this point, well, that leads us down to our three markets, right? We know the three markets we want to watch, gold and silver. I would say in this case, I'm definitely optimistic on gold. No doubt. I think it's going to smash their all-time highs on the dollar. It's already done that for the Australian dollar, the Canadian dollar. It's already done it for the euro. It's already, well, I don't know actually about the euro, but I would say a lot of world currencies in this case, right? And no doubt, I think it's going to do the same for those currencies as well. But all in all here, right, I do believe gold's going to go up. Problem is at this point, gold is around $11 to $12 trillion market at these valuations. For gold to double in valuation, we need it to be a $24 trillion market. Now, could it do that? Yeah, it could double its valuations. It could go to a 22 or $24 trillion market, whatever it is, right? But with Bitcoin, we're talking about an asset here that, according to CoinMarketCap, right now is $126 billion. And its supply is only going to grow slower in this case as we go towards the halving event. And as we go to the next 4-year cycle, or the next 4-year halving event, right? Not so much the next 4-year cycle, but you get my point, guys, right? We're talking about an asset here that really only needs to go to $300 billion in order to double its valuation. Not even that, right? It needs to go to $260 billion, give or take, right? Just kind of evening that out around $130 billion. I know why I have my confidence so strong in cryptocurrency markets, guys, and it's because when you take a look back, when you just take a look at the macro perspective and just step back for a moment, it all becomes very clear. Like Bitcoin, if you want to look at it in a very simple way, right? It's not being used per se as a global peer-to-peer money. I would agree with that. It's not being used at stores to buy goods or services. It's a hedge. It's acting like digital gold at the end of the day. And though I'd like to see maybe more utility for Bitcoin, and I think we'll see some improvements over time, much like we're seeing on the Ethereum blockchain and a lot of the innovation throughout the space, at the end of the day, it's doing what it needs to do. It's acting as a hedge. And it's about time we start to realize that there are not going to be much markets that really provide growth opportunity during this time of also providing protection and hedge. So, anyways, I hope you all enjoyed this video. I hope you all enjoyed my macro analysis here. If you liked it, drop a like. But let's go ahead and dive into our sponsored review for Hacken. Alrighty, everyone, so let's go ahead and spend some time to take a look at today's sponsor, and it is no other than Hacken.ai. Now, for those of you out there who care about cybersecurity as much as I do, as well as maintaining a simplified browsing experience, you'll definitely want to check out the Hacken platform. And I put it simple, Hacken is building a 360 all-in-one platform that not only teaches you the in-depth knowledge and proper practices of cybersecurity, but along with that as well, is able to provide a ton of tools such as its password management and darknet monitoring tools. And we'll dive into all of these tools and more as we take a look at the application in a couple of moments. But I want to go ahead and not only talk a little bit about the team's experience and the previous works, but along with that, talk about the key issue that Hacken is trying to solve. Okay, so let's go ahead and take a step back here. For many of you in the cryptocurrency space, the Hacken name will probably be a familiar one, as the Hacken cybersecurity ecosystem has existed since as far back as 2017. And they've built a lot of interesting tools, from exchange certification platforms to bug bounty program platforms. One of my favorite ones is Certified, and this is the one that actually goes through and manages different certification scores for user security and service security for all these different exchange platforms. It even keeps a tab on the overall cold wallet reserves in this case for these exchanges. Plus, their hacker-proof platform. This is where people can submit bug bounty programs to find exploit or bugs in previous applications or projects. So again, really interesting tools, just part of the suite of tools that they've come up with on the Hacken platform. And this comes from a team that has over 50 years of combined experience in cybersecurity. But all of this is really interesting, guys, and I want to talk a little bit more specifically about something that's probably one of the biggest issues that doesn't get talked about and we just tend to live with in today's world, and that's improper password management. This has been one of the biggest issues that techies have been trying to solve for the last couple of years, which is making sure that we can have a safe, secure experience where you're not going to have your password put you in a position where you could be exploited, where someone could easily guess that password and get access to either vital information or, worse off, your financial activities, in this case being able to manage your money and possibly steal your funds, right? So we can take a look here, and one thing that actually shocked me here, this is something that I learned as I was going through and studying the hacking platform, is that over 76% of people who are in the age group of 18 to 24 tend to reuse passwords, and it's actually the highest bracket out of any age group. But you can generally see here that this is a problem across all age demographics and all people across the world, that we tend to reuse passwords, and we tend to have a lot of flaws when we generate passwords. We tend to generate very simplified passwords that would either be put into a category of weak or very weak. And this is doing things, for example, like having 1, 2, 3 in our passwords, using our names in our passwords, and most importantly, repetition of those passwords in this case. That's usually what leads to mass security vulnerabilities for a lot of people. So we're going to be diving into the platform here, taking a look at the application, and we can not only see that the user experience here for the app is very clean, but it comes jam-packed with a ton of features that we're going to be diving into. The Cyber Bootcamp is probably the clearest and coolest function in my opinion. Teaching cybersecurity is probably one of the most complex aspects of making sure that people know how to take the proper steps and procedures. And we'll see that they have a very clear module system that makes learning about it a lot of fun and very engaging comparative to just having simple notes or simple educational points. Along with that as well, the darknet monitoring tool. So to put it simple, the darknet monitoring tool is actually going to allow you to be able to scan to see whether or not your information has been compromised on the dark web, so that someone else might have your information. You can at least spot it and change your password so someone wouldn't be able to access your account. And also the password manager tool. This is probably the biggest point here. Many of you have probably heard of a lot of different platforms like Dashlane, things of the likes, and those are all great platforms. But the cool thing that Hacking is going to provide, again, is that all-in-one experience where they can service as your password manager, even on mobile in this case. And we'll talk a little bit about that as we dive through the app, as well as their digital wallet in this case that allows you to store a decent range of cryptocurrencies. Now they've got a whole suite of tools here, and I want to really drill this in before we dive into the app, that they've got things like multi-factor authentication, secure storage, and VPN technology that they're going to be offering in the application as time progresses. It is in beta right now, guys. So again, toy around with it, test it out. It's available on iOS and Android, as we'll emphasize towards the end of the video, and we'll have a link down below in the description to find out more information. But let's go ahead and actually dive into the Hacking app. Alrighty, so now that we're actually inside the Hacking app, the first thing you'll probably notice is that the user experience is extremely clean. Again, I always look for a clean user experience on mobile applications. And you can see here that we're taking a look at the dashboard. This is kind of your central hub for all things in relation to your account. You can see a score here for your security health status. You can get jumped right into the education. And you'll also see that you have different achievements as well as collectibles tied to your high character. In this case, that's the major kind of icon for the Hacking app, in this case the little persona here. And again, we'll be able to see how we'll be able to collect some NFTs for our character as we go throughout the modules. And speaking about the modules, I think this is probably the best feature for those of you out there who are going to download the Hacking app, and that is the education that Hacking provides. Again, the biggest thing that I would always emphasize to people is if you want to be better at cybersecurity, you need to understand not only the basics, but a lot of the in-depth knowledge. And as you can see here, they have these very clean, colorful, and engaging modules that help you learn about not only the basics, but a lot of the complexities as well of cybersecurity. So for example, one of the things that I want to dive into here is the strong password section of the modules. This is something that I, again, always emphasize. It's one of the key elements that a lot of people mess up on. And they have a really cool tool here where you can actually type in a password and see how long generally it would take for a hacker to crack that password to an account. So for example, if I type something like hello world, for example, something that's up to 10 characters, it can be cracked in less than 10 seconds. But if we start to see, if we go back here for a second, we start to type a random conjunction of letters and numbers with different characters, we start to see that this password wouldn't be broke for centuries. And this is a very key practice that they teach here. One of the first key lessons as you go through. They teach you not to use things like password, very key obvious terms that hackers will look out for, or certain numeric increments of 1, 2, or 3 followed by one another in this case. So again, a lot of interesting lessons that you can use that really help you in the sense of taking on a sense of self-control here, in the sense of your privacy, your passwords, and your data in this case, especially if you're managing financial information or things related to your finances that could be hacked or stolen. So again, highly recommend you guys go through the education modules. But along with that as well, they have the toolbox here, and this is the third item on the tab at the bottom of the app. And this basically allows you to engage with a wide range of tools and services that Hackin provides. Now at the moment there are two that are available. There's passwords and the darknet monitoring. And down here as well we can see that they've got things that we talked about earlier, such as secure storage, multi-factor authentication, and also VPN technology. But again, this will come in due time. So the first two tools here they have here is the password manager. Now as you'll see here, I haven't imported any passwords into the application. Now sadly, for the sake of this review, I actually won't be able to use the QR code scan feature, as my phone recording software doesn't allow me to access my camera when I'm recording. But just to show you guys what it looks like, Hackin provides you with an exe download in this case that allows you to instantly connect with either a wide range of browsers from Safari, Chrome, Opera, and Firefox, to also platforms, for example, like LastPass and Dashlane. So you can connect to your already existing password managers or your browser applications where you might have some of your passwords saved. Again, Hackin is providing you the opportunity to have a password manager built into the application in this case. And basically, by clicking on one of these, for example, if we did, for example, Firefox, we click import passwords, our list of passwords would be here from the browser, and it would generate a QR code for us to scan in this case in order to access that information and import them into the application. But again, this is one of the many features they have on here. They also have darknet monitoring. So in this case, what I've done is I've actually plugged in my email here. This is our business email, for example, for the channel. And I've actually enabled darknet monitoring in this case, where what basically Hackin is going to do is they're going to keep a lookout in a lot of different darknet platforms to see if account information for our email or for our other platforms that we'll attach into the Hackin app have been compromised to some degree. If someone, for example, might have sold or captured our password information and sold it on the darknet, we'll be able to hopefully spot it here on the application, and then make changes to our passwords or our logins in this case. So a lot of really cool tools here on the app. Again, not overwhelming. The user experience is really clean, and it's easy for anyone to pick up, and it really makes cybersecurity simple for the average everyday person. Now, along with that as well, one simple feature just to kind of throw out there as well is that in the application here, you actually can store a decent range of cryptocurrencies, mainly around the VeChain ecosystem. So you have VeChain, VThor token, and you can also store the Hackin AI tokens in this case. But we can see here as well that we have digital collectibles. So as you go throughout the educational modules, you'll actually be able to get collectible items for your Hi character. In this case, Hi is the little module, little character here that they have here for the module program within the Hackin app. You can see here that I earned a baseball cap. This is one of the lower tier NFTs that you can get for your character in this case. And there we go. I've just customized my little Hi character here. So again, really interesting stuff here. I think the introduction of NFTs in this case, along with just providing basic wallet technology within the Hackin app, is really cool here. And I hope over time they provide support for more cryptocurrencies, as I think it would be awesome to just again tie in your cryptocurrency experience with a cybersecurity app like this. I think it's a great idea. It really fits into the all-in-one kind of approach that Hackin's going for. And along with that as well, there's different achievements here that you can unlock. So again, the gamification is real when it comes to Hackin. There's a lot of things you can do. And there's also a settings tab in this case where you can use Face ID or Touch ID, so you don't have to type your password every time you open up the application. You can see your seed phrase in this case, which of course I will not show in this video. But along with that as well, you can migrate passwords and do all kinds of stuff here. So all in all here, right, to summarize the Hackin app, I can't wait to see a lot of the up-to-date features, for example, such as the VPN, multi-factor authentication. There's a lot of things that I'm looking forward to. But right now, in its beta, the Hackin app is looking extremely impressive. And for those of you who want to get your hands on it to test it out, it's available for iOS and Android in its beta currently. Now again, bear in mind it is in its beta, but at the same time, you can test it out, you can download it real time, start engaging in the educational material, and as features come along, test out what Hackin offers in this case. You know, one of the things that I really want to get across here as we close out the video is to bear in mind that in today's world, here today, cybersecurity has never been more relevant in our lives. It's not only played a massive role in the 21st century as one of the biggest issues that we've had to face as a general populace, but along with that as well, with COVID-19, we have a lot of issues stemming from this viral outbreak. A lot of people working from home with a lot of their information information susceptible to hackers and people who might compromise that information, as well as having to deal with a general influx in hackers and criminal activity as we enter into economic downturns. So I would really emphasize that all of you out there test out the beta version of the Hackin' app, get more knowledgeable about cybersecurity, get a feel for some of the good general practices that you would want to take in this case in order to manage your data properly. But along with that as well, test out some of the cool tools that Hackin' offers. I think it's a great application. The user experience is clean, and I really want to say hats off to the team for building such a quality mobile application. So again, for those of you who want to figure out more, definitely go test it out on iOS or Android. It's available on either app store. And along with that as well, test out some of the features. Let me know your feedback down below in the comments, and you can check out the link in the description to find more information on their website. That being said, everyone, thank you all so much for watching, and I'll see you all in the next video. Stay tuned.